For more on the retail sales numbers, I'm joined by Edward Yruma. Edward is a soft lines apparel analyst at Keybanc Capital Markets. He comes to us now here from Manhattan. Edward, welcome to Bloomberg News.
Hi, thanks for having me.
These numbers did surprise you, correct?
Absolutely. We think that trends are improving across the board, and while we had a pretty positive outlook, they certainly exceeded our expectations.
Why do you suppose that was?
We think a couple things. First, we're seeing more consumers in the mall. Second, we think that the retailers' move to actually have more attractively priced product is working. You're seeing retailers where value is important succeeding. And third, we finally think that we're seeing some important fashion trends that are taking hold that are helping drive some sales.
Are we still seeing some discounting from this time a year ago?
Discounting is still prevalent, but it's significantly less than we saw last year. We think this is really important for our back half outlook.
Would we take into consideration then that this might give us a sense that consumers, as Zara Burton alluded to, are willing now to go back in the stores? They feel like, they've done their part. They've been saving, the personal savings rate at an all-time high in this country. And now is the time, maybe I should reward myself. Maybe I'll go out and buy that big ticket item. Maybe I'll buy that refrigerator or I'll buy that washing machine because I've been putting it off for almost a year.
We're definitely seeing that, but the one thing I'd like to emphasize is the consumer is still looking for that value. So while they might buy that big ticket item, they're definitely looking for promotions and for sales.
Who were the winners in September?
We definitely say Aeropostale. They've definitely continued to win with their value messaging. Their comp sales were up 19%. Abercrombie & Fitch had comp sales down, but I actually saw significantly improved results. They've actually gone and made significant great lengths to reduce prices. So.
How disciplined are retailers going to remain? I guess because when we were teasing this interview, it was, we can take some comfort in these numbers, but let's not go crazy. We're still trying to find our way out of this economic mess.
We think the retailers have actually been pretty conservative, and in fact, one of the themes we're hearing today is that they may have been overly conservative with inventory. At this point, it's really difficult to impact the inventory for the holiday season, so we'll have low inventories across the board, which would keep everybody pretty disciplined.
Edward, give us a sense on how the back-to-school shopping season may figure into these numbers.
Yeah, I mean, this certainly gives a positive outlook for the holiday season. Again, people are buying closer to need, so they're buying closer to when they actually have to go back to school, and we think that's going to be the case for the holiday season. We think consumers are going to shop late. They're certainly looking for those attractively priced products, but it is certainly, quite heartening to see traffic levels improve across the board.
Well, as we know, consumer with less spending capacity, how do retailers switch their paradigm to now fit into this new economic model?
It's taken a lot of blocking and tackling. The retailers have gone back to their vendors, tried to re-engineer products. They've gone and changed sourcing in many cases. So this has been kind of a 12 to 24-month process as these retailers have moved in this sharper priced products.
What are you looking at going forward? What do you think the numbers will look like by the end of the year?
We think numbers are going up across the board. Again, the key thing is that, you had inventory levels were very high this time last year, so we think the street still underestimates the gross margin opportunity in the back half of the year.
Edward Yruma of Keybanc Capital Markets joining us from Manhattan. Edward, thanks. Appreciate it.